Hey everyone, welcome back to Lazyboycrypto. Crypto technical analysis involves using chart patterns, technical indicators, and other tools to analyze the historical price movements of cryptos and to make predictions about the future price movements. So, chart patterns. These are recurring formations on price charts that can provide valuable information about the direction of future price movements. So, common chart patterns include support and resistance levels, trend lines, and triangles. A support level is a price level at which demand is strong enough to prevent further price decreases. In other words, it's a level at which buyers are willing to enter the market and buy the asset, causing prices to bounce back up. On the other hand, a resistance level is a price level at which supply is strong enough to prevent further price increases. In other words, it's a level which sellers are willing to enter the market and sell the asset, causing prices to fall back down. Support and resistance levels are important because they can help traders identify potential entry and exit points. So another tool are trend lines, and trend lines are drawn on a chart to connect the highs or lows of a price trend. They can be used to identify the direction and strength of a trend, as well as potential entry and exit points. An uptrend line is drawn by connecting two or more consecutive lows with the line sloping upwards. This indicates that prices are generally rising, and traders might consider buying the asset when prices approach the trend line. A downward trend is drawn by connecting two or more consecutive highs with the line sloping downwards, and this indicates that prices are generally falling and traders might consider selling the asset when prices reach the trend line. Trend lines can also be used to identify potential support and resistance levels. Moving averages are used to smooth out price fluctuations and identify trends. They are calculated by averaging the price of an asset over a certain period of time. Traders can often use a combination of short-term and long-term moving averages to identify potential entry and exit points. For example, if the short-term moving average, say the 20-day moving average, crosses above the long-term moving average, for example, the 50-day moving average, this is considered a bullish signal and traders might consider buying the asset. But conversely, if the short-term moving average crosses below the long-term moving average, this is considered a bearish signal and traders might consider selling the asset instead. Another tool is Bollinger Bands, and these are used to identify potential overbought or oversold conditions. They consist of three lines: a simple moving average, an upper band, and a lower band. The simple moving average is typically calculated over a period of 20 days, but this can be adjusted depending on whatever your preference is. The upper and lower bands are set at a certain number of standard deviations away from the moving average, and when the price of an asset moves towards the upper band, it is considered overbought, meaning that the price may have risen too far too fast and could be due for a correction. And conversely, when the price moves towards the lower band, it's considered oversold, meaning that the price may have fallen too far too fast and could be due for a bounce. Traders can use Bollinger Bands in a number of ways. For example, they might want to wait for the price to touch or cross the upper band before selling the asset, or wait for the price to touch or cross the lower band before buying the asset. Alternatively, they might wait for the price to move out of the Bollinger Bands altogether before making a trade, because this could indicate a significant shift in the market's direction. In addition to chart patterns, technical indicators can also be used to analyze cryptocurrency price movements. Technical indicators are basically mathematical calculations based on the price and/or the volume of a crypto. They could be used to identify trends, momentum, and other key indicators. So some common technical indicators include moving averages, relative strength index, and MACD. The RSI is a momentum indicator that measures the strength of a crypto's recent price movements. For example, traders may use the RSI to identify oversold or overbought conditions, which can then provide valuable insights into potential entry or exit points. The moving average convergence divergence, or MACD, is used to confirm potential trend reversals. Another tool is the ELLIOT wave theory. It's based on the idea that financial markets move in a series of waves, with each wave representing a segment of the market cycle. Something called impulse waves are composed of 5 waves, and they move in the direction of the trend. Corrective waves, on the other hand, are composed of 3 waves, and they move against the trend. Technical analysis is not a foolproof method of predicting crypto prices. Market conditions can change rapidly, and unexpected events can cause sudden price movements. So basically, crypto technical analysis is a valuable tool for analyzing historical price movements of cryptos and making predictions about price movements. But remember that it's only a prediction. It's not guaranteed. But by studying chart patterns, support and resistance levels, and other technical indicators, you might be able to gain a deeper understanding of the crypto market and make more informed trading decisions. But if you enjoyed this video, then please give it a like and also subscribe as well. It really helps me out and I really do appreciate it. Thanks for watching.